The concept of a global index fund is quite simple. They allow you to invest in thousands of businesses based all around the world. But there are different types of global index fund, and did you ever consider that small differences in the names of the fund could mean that you're investing into, potentially missing out on, or exposing yourself to over 2 times the amount of businesses? With the MSCI and FTSE global indexes, this can be a very real possibility. So let's take a look at the differences between the MSCI World Index and the FTSE All World Index, so that you know exactly what you'd be investing your money into if you invested into one of these via global index funds or ETFs. Neither indexes are investment recommendations, I'm not a financial advisor, and all investments have risk. Now, if you're unfamiliar with what exactly a global index fund is, let me quickly summarize. An index is another word for a list, and in this context, it is a list of businesses. We're looking at 2 different indexes today, and a fund is simply a pool of money that invests into something. So here it'd be a pool of money that invests into a list of businesses. A global index fund is a pool of money that is being invested into a list of businesses that are based all around the globe, rather than just in a specific region or country. And this is where the MSCI and FTSE indexes come into play. On paper, they might look like they should be doing the same thing, and they both cover mid to large sized businesses. But there are some pretty big differences between the indexes that you will need to consider before you invest into either one of them. MSCI stands for Morgan Stanley Capital International, and they are a financial services and investment research firm that produces tools for investors to use, like statistics, governance tools, and of course, indexes. FTSE stands for Financial Times Stock Exchange, and it's actually a combination of the 2 companies that created it. The Financial Times is one of the most respected economical news outlets that covers everything from current affairs to politics and reports on the effect that this will have on businesses. Some have even gone as far to say it's nearly as respected as Financial Interest. Our free newsletter that you can sign up to is in the description below. Then the London Stock Exchange is a place for companies to sell stocks to raise capital, or for governments to sell bonds. It's a bit like a food market, but for people who love line graphs. These 2 co-created FTSE indexes, with the most familiar one to the average person probably being the FTSE 100, which is a list of the top 100 businesses in the UK. Seeing as these 2 indexes come from completely different sources, they're bound to have some changes from one to the other, but the differences in reality are pretty staggering. The first difference is the disparity in the amount of businesses they track. The MSCI World Index tracks around 1,500 companies, and the FTSE All World Index tracks over 4,000 companies at the time of recording. This means that the FTSE All World Index tracks over 2.5 times more businesses than the MSCI World Index. But it's not just the amount of companies that you're getting exposure to that's different. You also have the regions that each index tracks as well, with the MSCI World Index only focusing on developed markets, whereas the FTSE All World Index covers both developed and emerging markets. This all comes down to the subtle differences in the fund names. FTSE's All World Index focuses on covering as much of the world as possible, including emerging markets, but MSCI's World Index does not focus on maximum coverage. MSCI does have a different index that includes both developed and emerging markets, but this is called the MSCI ACWI, with this totally different name being just one of 1,000 reasons why investing is so confusing for so many people. Emerging markets haven't performed as well as developed markets have in recent years, meaning the smaller MSCI World Index has slightly outperformed the FTSE All World Index over the last 5 years at the time of recording. This doesn't by any means mean that emerging markets won't perform better in future, as past performance is not a reliable indicator of future performance, but I thought it was worth commenting on nonetheless. The FTSE All World Index covers 49 developed and emerging markets, with a weighting of around 90% to developed countries and the remaining 10% to emerging. MSCI's World Index covers 23 developed markets, but to make things even more confusing, the providers themselves have different definitions for what an emerging market is. For example, FTSE classifies South Korea as a developed market, so you'd think it appears in both indexes. However, MSCI classifies South Korea as an emerging market, so does not include it. The biggest differences between the indexes in terms of the markets that they cover is definitely China and India. Both sit in the top 10 countries within the FTSE All World Index in terms of exposure, despite being emerging markets. In terms of other market exposure, the MSCI World Index is more heavily weighted towards the US, with over 71% of its holdings currently being located there at the time of recording, as opposed to over 62% of the FTSE or World Index's holdings. When considering which provider you'd prefer, this is definitely something you should take note of, as that's quite a big difference in terms of weighting. A lot of this comes down to whether you'd prefer more US coverage or coverage within India and China. There are other minor differences between the indexes, such as how often the indexes are updated and rebalanced, twice yearly for the FTSE or World Index and quarterly for MSCI World, and this might not make a huge difference to passive investors, but it's a disparity between the two either way. Both of these global index funds can be invested into nice and easily via ETFs, like the iShares Core MSCI World UCITS ETF or the Vanguard FTSE or World ETF. So there's definitely potential for you to invest into one thinking that it's the other. But now you know what the differences are between them, hopefully you'll be more likely to make a decision that's best for you. If you want to know exactly how to invest into a global index fund, watch the video that's on screen now.